Good morning and welcome to the Global Energy Outlook Forum 2024, the third session of the morning in Asia, a gathering today that will see 50 of the world's top energy analysts from 12 different time zones across 20 sessions, giving us their crystal ball outlook for the year ahead. We have had already S&P Global Commodity Insights tell us that they agree with the IEA that peak oil demand will be reached by 2030. They see that plateau, a growing consensus around that has big implications for all those thinking of investing billions and trillions into new oil supply. We've heard from the last session that China are price-sensitive buyers now. It's not about whether the economy is good or bad, strong or weak. It's what's the price. If the price is good, I'll buy it and put it in the shed and keep it for a rainy day. If the price is high, I'll step aside. And we saw a lot of that in China last year. And now we're being joined by a very distinguished panel of daily energy market podcast commentators who've been with us through the last year, have watched all of the trends play out. And the most significant one we're looking at in this session is, what is the continuing appetite across Asia for the Russian oil gift that keeps on giving, or if indeed does it keep on giving in 2024? We saw last year Russia's oil and gas revenues amounted to almost $100 billion, which was the equivalent of 2021 before the invasion of Ukraine. So if indeed are these sanctions having any relevance? Let's kick off this morning with Vandana Hari, founder and CEO of Vanda Insights. Vandana, your thoughts for the outlook this year of the so-called oil price cap on Russian oil exports by the G7 countries?
Good morning, everyone, and thank you again, Sean. It's an absolute pleasure to participate in this talkathon. As quite aptly titled this session, A Gift That Keeps Giving, it does look like it will continue to do so in 2024 as well. You just mentioned references to the price sensitivity of buyers in this region, of course, China and India being the big ones. Fully agree with that. So a quick recap of the numbers that we saw last year. So China and India collectively bought about 3.8 million barrels per day of Russian crude last year. On an annual basis, that was up 62% from 2022, which is significant. But an even more startling figure, Sean, is India's intake. So Chinese intake went up about 23% from 2022 into 23, but Indian intake soared by 165%. So of the 3.8 million barrels per day, India took about 1.6. Going back to the point of price sensitivity, and I think this is going to be key going forward, and especially a key also in terms of the competition that we see between Saudi Arabia and China. We can talk about that, Saudi Arabia and Russia. We can talk about that.
Maybe China as well, we'll see, but certainly Russia and Saudi Arabia seem to end the year with a little bit uncertainty around their relationship.
Yes, and the interesting, I was just looking at the data across the months last year, and Sean, it's not a coincidence that the months in which Russian crude was the lowest and also the most discounted, especially to Saudi crude, saw the biggest intakes from China and India. That's not a coincidence, right? And from December, we noticed that the Russian crude discount to Saudi crude shrunk. And of course, as we've seen over the past few months, Saudi Arabia has slashed its OSPs for Jan and Feb loading cargoes. It'll be very interesting to see, I think, how Saudi Arabia perhaps is trying to muscle its way in back into especially these two largest markets for not just Russian crude, but Saudi crude as well.
Let's go to India on that and welcome Narendra Taneja, India's leading energy expert. Narendra, your outlook for India's continued appetite for this Russian oil gift?
Well, India's appetite is there. As far as Russia is concerned, it all depends on economics. I mean, if they continue to offer discounts, attractive discounts, then of course, India's refiners, whether public sector or the private sector, they will keep on importing. Is the price and is also the delivery. So these two aspects are important because it's nothing to do with politics or India's very close ties with Russia. It's all about economics. India has been saying this from day one because we used to import hardly 2% of our total requirement of crude from Russia, and then it started climbing up. And in the West, they said, oh, it's all about politics. No, it's nothing to do with politics. It's about economics. So now if you see the data of the last 1 month, actually imports have come down a little bit. The reason being that the discounts seems to be shrinking. And Indian refiners have made it very clear that if you continue to offer attractive discounts, we continue to buy from you. Because from day one, it has been about economics. At the same time, there are now other options available. Venezuela, we have just, signed contracts with Venezuela to import Venezuelan oil. And there's nothing new about it. We used to import a lot of oil from Venezuela before the sanctions. We are importing more from the US now. And of course, at the same time, traditional suppliers like Saudi Arabia, Kuwait, UAE, and above all, Iraq. So all that will continue. But as I said, that in India today, we are consuming roughly 5.5 million barrels of oil every day. And bulk of that, close to 86%, is being imported. And so refiners are negotiating with Russians, they are negotiating with Saudi Aramco, Iraq, Venezuela, and a number of other suppliers. And if, for instance, we see that, sanctions against Iran are being kind of diluted, I mean, not lifted, but if the West does really have big issues on countries like India buying from Iran, that might also be a new chapter starting very soon. We don't know that yet. But we are certainly not going to do it if the US and the West, our friends in the West, are dead against it. Then India is not going to do it. Because in Iran, geopolitical objectives are the same. But on coming back to Russia, what I see is that, if discounts continue, attractive discounts, and the delivery mechanism, insurance mechanism, shipping, and so on and so forth, then I think India will continue to buy.
Let's welcome Osama Rizvi, energy and economic analyst, Primary Vision Network in Pakistan. Osama, Pakistan were a bit late to the Russian party, didn't get to enjoy too much last year, got some imports. What's your outlook for Pakistan and maybe even other smaller actors across Asia, but still having an appetite for discounted Russian oil in 2024?
Thank you so much, Sean, for inviting me today and letting me be the part of this panel. To answer that question, I would look at three factors. First of all, and the most important one, I believe, would be the economic prospects for the country, right? So Pakistan has been undergoing a lot of economic challenges. And in order to gauge its demand for Russian oil or oil otherwise, we would have to look how will the economic growth look like in 2024. So according to the UN's recent report, World's Economic Situation and Prospects, released only recently in 2024, the country would experience only a modest increase in growth, GDP growth, about 2%. Even in 2025, it'll only touch 2.4%. Inflation still at 40%. Food security, a big issue. The interest rates at 22%, the highest ever in the history of the country. Debt to GDP ratio, 89%, and so on and so forth. So what I'm
you can't buy oil from anybody.
Yeah.
It's no matter where it comes from.
Yeah, that's the thing. So the point is, this year 2024 is actually really challenging. But according to the World Bank economists, they just wrote an article for Pakistan in our newspaper Dawn that this can also be an opportunity for us to make some corrective actions, right? Take some corrective actions and put us in the path of sustainable economic recovery. On the other hand, in terms of the Russian oil, Sean, the challenges still remain. There are two challenges. The one is the technical ones, and the other one is the diplomatic ones. In terms of the technical ones, I've shared this with you before as well. Pakistan needs more high-speed diesel and less furnace oil, and that is exactly what we get when we refine the oil that we mostly import from the Middle Eastern countries, the Middle Eastern vendors. However, with Russian oil, we are yielding about 15% HSD, the high-speed diesel, but 45% furnace oil. So to put the equation together, we still have to import other oil to meet the demand for transport sector specifically. So it doesn't amount to, even the discount.
I mean, the Russians do seem to be also looking to sell their products in Asia, Osama. Are you appetite for that? Not, as you're saying, not crude, but send us products?
Yeah, that is where maybe we can see some prospects. But other than that, the refineries, there only 5 refineries are capable of processing the heavy Russian grade oil at the moment. We will need to do a big overhaul, rehaul of the refining industry for us to really benefit from this gift. And then the diplomatic challenges, Sean.
Let's come back to that, because I want to drill into that politics, because that is important. Let's first go to Vandana and get a sense of the overview there, Vandana, the politics here. We ended the year 2023 with, there seemed to be some resurgence from the G7, from the US and Europe. Oh, I'm really serious about this oil price cap and these sanctions and so forth. Do you think, is there a sensibility in Asia about these G7 sanctions? Is there concern? Are they just words on a page? Your thoughts looking into 2024, ending 23 with these words ringing in our ears that the US, Washington and Brussels are serious, and they've identified a number of companies, called them out, did sort of crack the whip a little bit. Your thoughts on the whip cracking of these sanctions on Asian buyers through 24?
Yeah, there's certainly concerns, Sean, and especially when I speak to the Indian refiners, they voice those concerns in private, of course, because there's a political element and there's a commercial element to this. There are concerns, though the received wisdom in the market in general is that the US / G7 would not want to do anything that imperils that majorly disrupts Russian flows into the market. Of course, prices have softened from the highs of 2022 and 23, but nonetheless, they wouldn't want to do anything. But that said, I think, as you mentioned, the crackdown on the implementation of the cap last December, it did cause a few disruptions, especially into India. There were reports, you might recall, of some so-called crudes into India. Now, again, mind you, so-called is the smaller stream going into India. The large one is, of course, Urals. But there were nonetheless some so-called cargoes that did not make their way all the way to the Indian shores. And turns out that a lot of them were absorbed by China. And that stemmed from a little bit additional sensitivity on the parts of Indian banks after the US and EU had cracked down, because so-called and ESPO are some of the grades that trade well above Urals. So they did not want to be engaged in financing trade which was very clearly above the $60 price cap. But it
doesn't appear that China has any sensitivity to the US sanctions, whether it be Iran or G7.
I was just getting to that. So the very fact that China seems to have absorbed those cargoes without any problem, as far as I know. And I haven't really heard of any sort of apprehensions on the part of Chinese banks when it comes to financing cargoes that are above $60 per barrel price cap. I think that will remain the distinction between China and India going forward. So yes, I mean, if there is a continuing crackdown, right now, that fear has receded a little bit because global prices have come down and so have the Russian crude prices. But I think that will remain a bit of a concern for India. I would certainly not say that it is something that could dent Indian imports in a big way of Russian crude.
Narendra, of course, in 2023, the significant amount of Russian oil imports coming into India at these discounted rates certainly participated, helped the economic growth of the country, saw great performance last year. And now as we go into 24, of course, there's an election year with the elections in May, the parliamentary elections in May. Where does the outlook and the politics around the sanctions, the Russian oil, the relevance of it to the elections and the economic well-being of India in an election year?
Well, good question. You see, now, first of all, these G7 sanctions, India is nothing to do with those sanctions because India is an independent country and there are no sanctions against Russia, which means all corporate entities, whether in refining or in banking, I mean, they're free to do business with Russia, and which in fact they are doing. What Vandana mentioned is basically there are some banks, no problem in terms of importing crude oil from there, but sometimes there are some issues involving payment because Indians are very keen to pay in rupees and Russians have problem in accepting rupees. And Russians have been suggesting, why don't you use Chinese currency via some banks in Dubai? And Indians, Indian refiners are reluctant to do that. We don't want to use. We have used Chinese currency couple of times, but actually we are reluctant to do that. So it's basically all about that. But as far as India is concerned, sanctions.
What is the difference in the currency issue? I mean, why rupees, not dollar? Why not the Russian ruble? What's the different dynamics around the currencies?
Well, dynamics is very simple. You see, Indian rupee is not fully convertible. It's convertible on capital account. Even Chinese currency, yuan, is not fully convertible. So that's why, which means that you have to go via Dubai, pay in maybe in the UAE currency, and then in turn, that's kind of, exchange with the Chinese currency. So it's a more complicated route. But India is not happy with it because for us, UAE currency is as good as dollar because it's pegged against dollar. So we are very happy to use the UAE currency and then transfer that to Russia. But now in some systems, there are some problems because they are tightening, the G7 countries are tightening the financial kind of, systems internally, and that's creating some complex. So with these two cargoes, which for instance couldn't really deliver oil to Indian refiners and had to go to China, this basically nothing to do with any Indian policy. It's all about the payment. But that's being sorted out, I hope. Our foreign minister was in Russia just a few days ago for full 5 days. And among other things, this was on the table. So, and also to send a message, full 5 days in Russia means that India, for us, Russia's, strategic autonomy is important. India is extremely uncomfortable if Russia slips into the Chinese lap 100%, because we want Russia to stay strategically autonomous, independent from China's influence. That's in our interest. And in fact, we think that's also in the interest of the West. Otherwise, Chinese will be sitting on the borders with Europe and European Union. So they have to, so that's the view. But coming back to India, economy is doing extremely well. And we are growing in the region of 7%, and we will continue to grow in that region, 6.8 to maybe 7.3 in 2024. Election year, but this is only actually a good economy, good policy, only helping the economy and therefore helping actually politics. And we don't know, it's very difficult to predict, and I don't want to make any kind of prediction, but the chances are that BJP ruling party will return to power.
Well, all the polling indicates a landslide victory for the BJP.
Well, as I said that, most likely the Prime Minister Narendra Modi will return to power, with the third term, because he's doing well, the economy is doing very well. We are a democracy. I mean, unlike what we are hearing from the United States, India, the story is quite the opposite in the sense, very stable political landscape, very stable economic landscape. And therefore, in India, if you come to Delhi, Bombay, Chennai, Bangalore, everybody is talking about how fast India can become a developed economy, and the target is
there's no sensitivity in India regarding the G7 oil price cap. It's a non-factor. If the price is right, you'll buy it.
Well, if you come to Delhi or Bombay and ask G7 sanctions, probably people are going to say, "What did you say? What exactly is?"
Who is the G7? That might be that might be the black swan of 2024. Exactly. Osama, we were going to get into the politics there. Of course, Pakistan don't quite have that independent ability that India, which is a massive country, massive continent, massively important place. Pakistan still has to be sensitive about the politics. How does that play out as Pakistan considers engaging Russia, engaging this discounted oil opportunity?
Yeah, so on the diplomatic or the political front, I believe, and it relates to the economic one as well, So recently, as I've shared some concerning statistics, but what is good one of the most positive things that have happened in the past few weeks or a month is that there seems to be an urgency and agreement amongst all the stakeholders to resolve the Pakistan's current economic crisis. And this has been, this could be seen in the form of the special Investment Facilitation Council, known as SIFC, where both all the actors involved in the decision making are on the same page. There are a lot of projects.
How does
that
work with the election coming in Pakistan?
Yeah.
That you, I mean, it seems somewhat counterintuitive that you would have political alignment about an economic crisis when everybody's trying to fight their way into the parliament.
Yeah, that is there, the sloganeering, the different mandates and everything. But still, to put, I mean, there are, in fact, talks of putting an economic emergency in place at the moment. So, I mean, I can see a growing consensus among everyone that we should be resolving this. And there has been some improvements in the indicators as well. I mean, Pakistan was on the cusp of default, but now we seem to be moving in the opposite direction. So next, as the elections happen, I believe that Pakistan, the new government, will be keen to hop on another IMF plan because we will need it, certainly. And as such, the appetite for Russian oil or to take a risk at this point to maybe get sanctioned or maybe get into trouble from the US side, or maybe face delays in getting funding from IMF, I think nobody's going to risk that. So I think Pakistan will be sticking with with their Middle Eastern vendors, which is good. We have also been tapping out because you need to look at the full spectrum, right? So I've always been really inclined towards the Central Asian states, and Pakistan has been doing that. So we've got LNG, we've got some other food products from Azerbaijan. Talks are in place at the moment with other Central Asian countries as well. So we're looking at the full spectrum at the moment. So policy choices that would not bring some serious consequences to Pakistan, I think that would be the priority of the upcoming government, and that should be the priority of the upcoming government.
Let's bring in the survey question on this topic so we can sort of build it out a little bit in terms of the view. What is the appetite across Asia for the Russian oil gift that keeps on giving in 24? Increasing, decreasing, or steady, essentially remaining the same? Looking at that point, Vandana, as we go into a year, we had an $80 average oil price last year. The discount for the Russian barrels was there. As we move into a new year, 2024, the gap between the price cap politics and economics and the market price seems to be closing. If that is the case, is there a natural default position in the Asian buyers to return to the Middle East producers? They're more would prefer to return to normal if the price is right? Or where do you see those two things intersecting? We saw most notably the Saudis start the year with a surprisingly significant discount on Asian barrels.
Yeah, so for the region's two largest buyers, China and India, I think it will remain a factor of what the prices are doing in general. So in terms of course, the international prices, I do expect China to come back into the market and perhaps replenish some of the stocks that it drew down towards the end of last year. Basically just be an opportunistic buyer and start storing oil back into its either commercial storages or strategic inventories. As far as India is concerned, I expect Indian oil demand to remain, growth to remain strong. Perhaps not as strong as last year, which was nearly 5% growth year on year. I think that's a bit on the stronger side. Yes, Indian economy is expected to continue a strong growth, but I do not expect the momentum in oil demand growth to remain the same. I think India will continue buying as well, basically to satisfy the domestic demand. So that's a little point of a difference between China and India. India has very, very small strategic reserves, nothing to write home about. So India would not be doing that kind of buying.
There has been the reports of India looking to build out its strategic petroleum reserve. Yeah. They're well below the 90-day net imports as a part of the OECD. But Vandana, what about other countries in Asia, the very large. Indonesia faces an election coming up as well. Pakistan, India elections, but Indonesia most notably very close to Singapore. What is the outlook for those economies and their energy consumption in the 24?
So the Southeast Asian economies did all right, perked up a bit in the first half of last year, especially as China came out of its strict zero COVID policy. But they seem to have turned a little bit sluggish. Now, of course, mind you, Southeast Asian economies, the big ones, remain amongst the fastest growing economies globally. And, it's also part of just a factor of demographics. And that will remain the case. But I think it's worth bearing in mind that their fate and their momentum is to a large extent dependent on China. A lot of these economies benefited when, for instance, China started to become a bit decoupled, or rather US and Europe started to distance themselves a bit from China. We had the IRA Act, the CHIPS Act in the US. Those acts have actually taken back what they had initially given to countries like Vietnam and Thailand. In terms of the US just bringing back all production, because earlier it had been moving some of its supply chains from China to the Southeast Asian countries. So a year of, I would say, robust continued growth, but I think nothing...
Robust, that's a big word. We must just get to closing comments now, because we are a bit on a more hard finish today due to other sessions waiting behind us. But Narendra, I wanted to get your sort of wider view of India's year ahead. You mentioned there the 5 days for the foreign minister to be in Russia might signal the growing view that maybe the war in Europe is coming to an end. The Indian elections in May. The outlook for the overarching year ahead, the BRICS, what's the outcome for the BRICS going into this new year with Saudi Arabia now joining? So a wider view for India on the year ahead.
Well, good question. You see, if you look at the landscape, let's say from Israel to Japan and then down to Australia and New Zealand, the region that's very important for us, there are two major worries. One is, of course, the Middle East, and we hope that, things don't escalate, that the US would be able to exercise, pressure on Israel, sufficient pressure to basically contain these things so that it doesn't escalate, attacks on Hezbollah bases and all that, make India a little bit uncomfortable. And also what happens to those, those people in Gaza. If we start getting visuals where people are starving or there is a famine and all that, that's going to complicate, India's, view as far as the Middle East is concerned. We want to see stability and we want to see that it does escalate. Let's not forget that India and Middle East, GCC countries are very closely integrated economically. As we talk, in fact, the UAE president is in India and was just received by our Prime Minister. So, but economically speaking, the biggest worry is China, in the sense that, we may not have great relations with China, but we want China to continue to grow because it's in our interest. I mean, our view is that China is not growing at 5% GDP, as they claim. Our sense is that they're probably growing in the region of about 2%. And if that is the case, and at the same time, we see that the new policies are such that they're not going to attract much investments, whether in whatever sectors. And the focus seems to be more on strengthening the Communist Party and not the People's Republic of China. If that is the case, Chinese economy is going to suffer. And our sense is in 2024, many of us in India, we think that in 2024, China GDP will actually move southward. And whatever they may claim, that we are
move southward, it will actually contract.
Yes, absolutely. And also in terms of the perception of China being a very kind of economy which is going to catch up with the United States very soon. We don't think that's going to happen because China actually, instead of moving northward, started going southward in